The number one triangle chart pattern trading strategy that no one talks about. In this video, we will be showing you how to trade triangle chart pattern like a professional, and also be revealing to you our advanced strategy that took us years to learn, and now you'll be able to learn it in less than 7 minutes. Make sure to hit the subscribe button and turn on the notifications bell so that you know exactly when new content is released. Also, let us know your thoughts and comments below or video topics you want us to cover, as we always listen to your suggestions and take them into consideration when we plan new videos. And importantly, we always love hearing from you. So, here are the 5 key parts of triangle chart patterns that we will cover in this video. 1. What is triangle chart pattern? We are going to explain everything in detail. 2. What are the factors that determine a quality chart pattern? This is important for you not to enter a trade that is not correct. 3. How to identify take profit targets. And 4. How to identify stop loss points. And 5. The types of triangle chart patterns and how to trade each one successfully. 1. What is triangle chart pattern? Triangle chart patterns are formed by drawing trend lines that meet at an apex. Triangle patterns are among the most common chart patterns you will see, and they are easy to identify as well. 2. What are the factors that determine a quality triangle pattern? First factor is the number of times price touched the trend lines. You want to see at least 2 touches on both trend lines, making at least 4 touch points on a pattern. The more price touch the trend lines, the better the pattern. But you need to put into consideration the next factor, which is that quality triangles don't get to the apex before a breakout will occur. So you want to see the market fill around 70% or 2/3 of the triangle, but not get to the apex of it. The chart you can see on the screen has 4 touch points, but the price is too close to the apex before we get a breakout, and this is one of the things that nullify the setup. Although there are other things that nullify the setup, however, one of the most important things is that the price filled it completely. It is important that you train your eyes to spot triangles in the market. And one way to achieve that is by looking for these patterns on the chart even when you are not trading. Number 3. How to identify take profit targets in a triangle pattern. There are 2 target points you can aim for when trading a triangle. The first is the height of the triangle, and the second is the height of the recent swing high or swing low to the lowest or highest point of the triangle. Most people use the height of the triangle as the target point, and this is what we advise you to do as well. Also, your risk to reward ratio must not be less than 1:1. That is, you should have either equal or higher ratio than your risk. So aim for at least 1:1. Don't aim for anything less than that. It is of no use to enter a trade that has wider stop loss than your take profit targets. And always set stop loss. So if you are enjoying this video and find it helpful, please leave a like and comment to support our effort. We appreciate it. So let's get back to the next point. Number 4. How to identify stop loss points in a triangle pattern. There are 2 stop loss points as well as there are 2 target points, but I will tell you the best one to use. You can use the highest point of the upper trend line in a bearish market, or lowest point of the lower trend line in a bullish market. Or the one that I have been using successfully is that you should use the highest point of the second to the last swing high or swing low, and a lot of people use this as well. So number 5, types of triangle chart patterns and how to trade each one. First, there are 3 types. We have symmetrical triangle, we have ascending triangle, and descending triangle. Symmetrical triangle occur when we have trade lines at the top and another at the bottom while the price converge to a point. The market becomes less volatile as price moves towards the apex of the triangle. And the reason this is called symmetrical is because the angles of both lines are equal. That's in mathematics, you are expected that the angles should be equal. However, you should not expect the angles to be 100% equal here in the market, because you only have to see that the angles are similar. They shouldn't be 100% equal. So you should expect the price breakout to occur in the direction of the trend in a symmetrical triangle. So the psychology behind the formation of the triangle is that there is balance between the buyers and sellers in the market. So when you see a symmetrical triangle form in a downtrend just like this, then you should look for sell breakout. And when you see a symmetrical triangle in an uptrend, then you should look for a buy breakout. Set the take profit to be the height of the triangle measured after the breakout, and stop loss will be the highest point of the second to the last swing high. But mind you, ascending and descending triangles are more certain than symmetrical triangles. Ascending triangle. In ascending triangle, you will have a resistance trend line and bullish trend line coming together. The psychology behind this triangle pattern is that buyers are in control. That is the reason you will see continuous higher lows, and price will often break to the upside. Ascending triangle is a bullish continuation pattern, so you should expect a bullish breakout. So in this example, breakout occurred at about 70% of the triangle, and we have at least 4 touch points on the trend lines. So you are going to set the take profit to be the height of the triangle measured after the breakout. Stop loss will be the highest point of the second to the last swing low. So descending triangle. Price form descending triangle when it moves within a support trend line and resistance trend line. The lower highs that forms around the resistance trend line shows that sellers are in control of the market. This triangle is a continuation pattern in downtrend, and we expect price to break downward. You can see that the price touched the resistance line 3 times and the support line 2 times before eventually breaks to the downside. Price covers around 70% of the triangle, and the breakout is not too close to the apex. So set the take profit to be the height of the triangle measured after the breakout. Stop loss will be the highest point of the second to the last swing high. Now, knowing how to trade triangle chart pattern is great, but it doesn't always form in the market. If you want to understand other trading strategies and other chart patterns, then join our Telegram channel for free. Thank you for watching. I will see you in the next video.